When you need access to quick cash or want to earn passive income by lending money, traditional banks often feel slow, rigid, and outdated. Borrowers face high interest rates on credit cards or predatory terms on payday loans, while everyday investors are left with savings accounts that barely keep up with inflation. This disconnect brings up a fundamental question. Is there a better way to connect people who need money with people who have capital to invest? That is where peer-to-peer lending platforms come into play, and Lenme has emerged as one of the prominent mobile platforms attempting to disrupt this space. Lenme operates as a peer-to-peer micro-lending marketplace. Instead of borrowing directly from a bank or financial institution, Lenme connects borrowers directly with individual investors, lenders, and institutions through a single smartphone app. Borrowers can request short-term cash advances starting at small amounts like $200 or personal loans ranging up to $5,000 and even crypto-backed loans up to $10,000. On the other side of the platform, everyday individuals can step into the shoes of the lender, providing funding for these loans and earning interest returns that compete with traditional investment vehicles. To understand how Lenme works, you have to look at the process for both sides of the marketplace. For borrowers, the process begins by downloading the app, connecting a bank account, and submitting a loan request. You set the amount you need and the time frame in which you plan to pay it back. Rather than assigning a single fixed interest rate, Lenme places your request into a live competitive marketplace. Lenders on the platform review anonymized borrower profiles, income data, and cash flow analysis, and then compete against one another by submitting loan offers with varying interest rates starting as low as 3% APR. As a borrower, you retain full control to compare these competing offers and select the interest rate and repayment terms that best fit your budget. Once an offer is accepted, funds are transferred directly into your linked bank account, often as quickly as the next business day. For investors and lenders, Lenme flips the script on personal finance by making private lending accessible. Investors can browse a feed of active loan requests, assess the risk profile of each borrower based on financial data provided by the platform, and choose to fund whole loans or portions of loan requests. When borrowers make their scheduled monthly installment payments, the principal plus interest flows back to the lender, generating a stream of passive income. However, using a peer-to-peer platform like Lenme comes with distinct risks and fears that both borrowers and lenders must navigate carefully. For borrowers, the primary fear is hidden costs or getting trapped in high-interest debt. While Lenme advertises competitive rates, actual interest rates depend on your credit profile, income consistency, and the willingness of lenders to bid down your rate. Additionally, Lenme operates on a subscription model and charges origination or administrative fees, which means you must carefully calculate the total cost of borrowing, including monthly app subscription fees, before accepting a loan offer. For lenders, the single biggest concern is default risk. Unlike FDIC-insured bank accounts, funding peer-to-peer personal loans carries the inherent risk that a borrower may late pay or default entirely on their loan. While Lenme uses machine learning and bank data to evaluate borrower creditworthiness, peer-to-peer loans remain unsecured unless tied to crypto collateral. In crypto-backed loans, the borrower's digital assets serve as collateral and can be liquidated if the borrower defaults or if crypto market prices drop sharply. However, for standard personal loans, lenders bear the risk of uncollected debt. The actionable takeaway for anyone considering Lenme depends on which side of the transaction you are on. If you are looking to borrow, use Lenme as a tool for short-term financial gaps or debt consolidation rather than long-term lifestyle funding. Always compare the total annual percentage rate, including all platform fees, against alternatives like standard credit cards or credit union personal loans. Take advantage of the competitive bidding process by waiting for multiple offers before selecting the lowest rate. If you are looking to invest on Lenme, risk management is paramount. Never put all your investment capital into a single loan request. Instead, spread your funds across dozens of small loan requests with varying risk tiers to diversify your exposure. Factor platform subscription fees into your overall return calculations and start with small capital allocations until you understand the default rates on the platform. Lenme offers an innovative bridge between people who need short-term liquidity and investors seeking yield, provided both sides approach the platform with clear calculations and a firm understanding of the risk involved.